Welcome everybody to this investor webinar for medicinal cannabis company Little Green Pharma, stock code LGP. We have with us today Fleeta Solomon, Managing Director and Co-founder of Little Green Pharma, to talk about not just the amazing things Little Green Pharma has achieved in the Australian market, but also the transformational acquisition the company recently announced. Fleeta, over to you.
Thank you, David, and hello all our shareholders. Fleeta here. Welcome to Big Green Pharma. You will have seen the recent announcement pertaining to the acquisition of LGP Denmark, and I just wanted to share with you the rationale for the purchase of this incredible asset. I'm going to keep this fairly brief, but I will be referring to the Denmark acquisition and capital raise presentation, which accompanies this, and I'm going to assume that you've seen it. Of course, should you still have further questions, you are very welcome to contact me directly. So this acquisition, it's a really big step change for Little Green Pharma. We are now one of the largest solely medicinal cannabis companies in the world, and we couldn't have done it without our incredibly loyal shareholders. So for this, I am truly grateful and thank you very much. Okay, we're going to go to slide 3. First of all, what have we actually acquired? Well, LGP has acquired a world-class medicinal cannabis facility in Denmark, and this was previously owned by Canopy Growth Corporation, and we've purchased this for 20 million Canadian. So this cultivation and manufacturing facility is capable of producing more than 20 tonnes of biomass per annum, and this immediately increases LGP's cultivation capacity from the 3 tonne to 23 tonnes per year. So fundamentally, this facility gives us all the capacity we need for our markets in the foreseeable future. So it's not only done on a cost-effective basis, but it brings our growth plan forward by about 2 years. So just the next slide. We feel we're a much better owner and fit for this facility just based on our very different business models. It's only been operating at 25% capacity to date, yet we believe this facility hits all its optimization straps when it's operating at full capacity. So the primary focus for LGP is ramping up sales using the existing resources of very minimal capex to see what this facility is really capable of achieving. So the purchase price was 20 million Canadian. In favourable deal metrics, we've paid 10 million already on completion, and we will owe a further 10 million payable in 12 months' time. Now let's put this in context. Based on publicly available accounts, it looks like Canopy has spent roughly 100 million over the last 3 or 4 years, of which 60 to 70 million was spent on property, plant and equipment, all of which comes with this acquisition. Okay, on slide 6, you've seen this slide before, our business model. It's nothing new. And this is what made the acquisition decision so easy, because it solves the issue of cultivation capacity on very favourable terms. As you know, the demand from Germany has resulted in our flower production reaching capacity at our WA facility, and the need to immediately expand further was very well known. So straight away now we can have biomass. So on the next slide, I want to remind you of the strategy we've been talking about for a while now. And this slide says it all. It has always told the story about where we're going and how we're going to get there. And this is it. The target here is commercial sales volumes in international markets. So if we go into the next slide, we'll go to slide 9, and this is LGP Denmark, and she's a real beauty. This really is a world-class facility. It's GACP cultivation and holds an EU-recognised GMP and manufacturing licence with proven export sales. It's huge. The cultivation glasshouse is more than 21,000 square metres, and the post-harvest GMP site is 4,000 square metres, and this includes a laboratory for testing purposes. To our advantage, there is already product in the vault and plants in the ground, so we've been busy planning the placement of that product so we can hit the ground running. Remember, the facility, it's only been operating at 25% capacity. However, we will aim to scale to 50% capacity with the existing team and resources. On slide 10, there's a video link. I won't play it here over Zoom because it can be it can distort the presentation, but please check this video out. It's definitely worth your time. It'll give you a sense of the scale and also of the opportunity that we have here. This is a serious operation with serious capability. Okay, let's look at the strategic rationale. And remember that strategy. That's the prism we looked at this through. We asked if this accelerated and assisted our strategy. And the answer was a definite yes. It's consistent with our expansion strategy and it's a clear strategic fit with our existing operations and capabilities. So we've been planning to expand our operations in WA to meet growing market demand. So when this deal came along, the decision point was either build or buy. And we decided to buy. It significantly accelerates our planned capacity expansion by about 2 years. And this enables faster market penetration, which is so important for LGP. It also increases our cultivation from 3 tonnes to 23 tonnes of biomass per annum. And it gives us the ability to remain vertically integrated with longer term supply. So there's no need to rely on third-party raw material. The acquisition provides the platform to leverage our early mover advantage and brand equity into key EU markets. And this allows us to meet the market demand that we're experiencing right there where we want to be. And this is so key again to our vision, our goal, and market penetration. So having these 2 strategically located production facilities really improves our distribution strategy and it avoids the complex nature and complications associated with import and export and logistic issues and problems. So like I said earlier, this facility hits all its optimization straps when operating at full capacity. So efficiency gains are achieved through greater scales of operation. And this facility is expected to produce medicinal cannabis flower at superior economics to the West Australian facility. Okay, let's go on to slide 14, and I'm going to put this project in context for you. Firstly, we did the earlier raise this year based on building out our WA capacity. Subsequently to this, this opportunity came up, and hence it became that build or buy decision that I spoke of, and it was a clear, logical step for us. We hadn't started on the WA expansion build, and so we planned to defer the cost to put towards this facility. However, we will continue to expand the manufacturing facility in WA just on the back of that re-rated cultivation capacity. Okay, so to expand our WA facility from 3 tonnes to 6 tonnes of biomass per annum, it was going to cost us about $8 million and probably about 2 years to complete. So this equates to about 2.7 million per tonne. So if we can compare this now to the Denmark facility, which immediately adds more than 20 tonnes of biomass for 1 million per tonne, plus the 2 years of additional market access available to us right now. So now we are in a position we can focus solely on rapid share acquisition in our target market. For those wondering about the purchase of the land in Western Australia, this is still important to us. Owning the land will protect a significant amount we've already invested in, and it's likely we will use the adjacent land in the future. And also, the 2 adjacent blocks are currently being rented out. So this will continue. And owning the land, it positions us really well to explore debt funding options in the future. Okay, let's go on to post-acquisition integration, slide 15 here. So this is our focus slide for integration. It's our full plan. These are what we believe are the key areas that we've been focusing on. So the first one there I'll talk to is culture. All the staff in LGP Denmark are retained. This is a top team. They've got more than 3 years experience of pharmaceutical grade medicinal cannabis. They've been working with the biggest cannabis company in the world. So now we'll just shift the mindset from just being producers to being fully across that supply chain, including the selling of this end material, which is what they weren't doing up until now. We will also have some key LGP personnel spend some significant and meaningful time in the EU. Clearly, we've got some challenges with COVID, but we are considering how to do that. I'll just focus a little bit on sales and marketing on the next slide. We have a laser focus on selling, and we're really confident with increasing our sales volumes. The management at LGP Denmark were recently exploring a management buyout. So they already have a few leads in terms of sales pipelines, and we've been doing our own sales pipeline during the whole due diligence process. So we've already got plans here and we've made quite significant progress. We're also aiming to launch a new business revenue stream, which is the launch of white labeling capabilities. So this will be used for other companies that's wanting to have their own brand. We'll have that, which just opens up a brand new revenue stream. If we just on the next slide there, we've considered a phased and a very capital conservation approach to facility CapEx as we ramp up the operations over 4 phases. The purpose of this slide is just to show you that we've thought about how we're going to do this and where we're headed. Okay, on to slide 18, the clear pathway to international sales. You've seen this before, and it's how we're advancing our sales pipeline into these markets. Poland, our distribution partner Medicine, it's aiming to sell LG products, 20% of the markets for our cannabis oils and 10% of the market for our flower medicines. So a great agreement to have with one of Poland's largest pharmaceutical operators. In France, you're aware that we've got that primary medicinal cannabis supplier role with the French government. This is significant for us because it gives us that first mover advantage and brand equity in a potential new market. Germany, our distribution partner Demican, they've given us firm purchase orders just for this calendar year alone for 5.7 million. And that's just over 47,000 units of medicinal cannabis. Again, this is meaningful because it represents real evidence of the success of our strategy into export markets. But it also reflects not only the demand coming out of Germany, but the confidence in LGP medicines in that market. So we're going to continue to add to this as new markets open up. Okay, we're going to skip through to slide 26, which is the total addressable market. And I want to show you this because you need to appreciate where LGP is headed. So just the slide before that, if I can. So just one slide back, Alex, please. Yes, thank you. So according to Canaccord Genuity, it's estimated that LGP's existing target markets, and these are the countries that we're either delivering into or have distribution pathways in. And that's about 23 billion at maturity. And this excludes the country Poland. So what's meaningful about this, and the reason I just want to bring your attention to it, is that we feel if we can capture market share overseas due to our first mover advantage and establishment of that brand equity, just as we've done here in Australia, we will continue to really hit our targets in these overseas markets. Okay, just onto the key points slide. This was, and really just finishing up here, it was a logical strategic step for LGP. And we had a need for increased production and manufacturing capacity or capability. And this world-class facility, it delivers it for us immediately on a cost-effective basis and right in the market where we need to be. So this facility has so much potential, and really we just want to take the shackles off it. It's been hamstrung with limited operational capacity until now. So now we can see her operating in her full glory, and we can't wait to work with the LGP Denmark team. So thank you, shareholders, very much. See you again soon for more updates on the Little Green Pharma progress. Thanks.
Thanks, Fleta. A great presentation. Clearly a transformational deal, the acquisition and associated capital raising. A couple of questions that just come to mind. One for me, you say the facility's running at about 25% capacity. Now, that's not down to lack of demand in Europe for product. It's really down to the business model that the previous owners had.
Yeah, that's right. So look, they're two different business models, and it was really only at 25% capacity because the company was selling internally and has many assets across the globe. But I'll just point out that their core business is more in the recreational space in North America. And so when you're dealing with EU GMP, the price of this cannabis material is a lot higher, and the rec market will generally not look to that high grade cannabis material. So for us, it just fit like a glove because we don't just sell internally, we're selling externally. It's all about the LGP brand. So straight away, this is a much better model. We know the operational efficiencies are much better at scale. So what we're planning to do is taking it from 25% capacity to 50% capacity. And then we're very fortunate in that we can scale up to 100% when we need to, if necessary.
And as you mentioned, doesn't require a big CapEx cost. All of that's been sunk.
Yeah, look, to get to 50%, not much is required at all. It's really set up as a flower production facility. So as we look to do oil productions and other finished medicines, there will be some additional CapEx, but just in terms of buying the equipment, which of course will need validating and a little bit of time for stability data. But generally speaking, this facility is with all the bells and whistles as it is, so no expense has been spared.
And in terms of, like you say, the business model's different, that Little Green Pharma will be selling externally rather than internally. What are the partners or the distribution groups that you've already forged very strong relationships with think about this facility coming into Little Green Pharma?
Oh, look, I think they're just so happy because, they were starting to get a little bit concerned that, well, hang on, if your production in Western Australia is at full capacity, how do we get more? How do we grow? So this provides a great solution to them. So they're all very happy to hear the news and straight away wanting to explore how to get produce out of the Denmark facility.
And how key is it having the Denmark team join the Little Green Pharma team, bringing two quality groups of people together who are experts in their fields now joining forces?
Oh, do you know what? This team, it's such a top quality team. This was part of the attraction to this whole acquisition. Medicinal cannabis is new, especially in that pharmaceutical space. So to be able to have access to this top quality team that have been working on medicinal cannabis in the EU GMP pharmaceutical space under Canopy Growth, which is the largest corporation for cannabis in the world, and to have Denmark pharma experience in 3 years is phenomenal. So look, it's culturally a great fit. This team in Denmark, all they wanted to do is grow the plant, finish a final medicine or prepare a final medicine and send it to patients. But they weren't able to do that just because of internal business models. But now they can. And so we can bring the two facilities and the two groups of teams together, and the experience that we have. I don't know if there's another group or company in the world that has the experience that we've got across the two operations. So super thrilled.
And investor reaction seems to be extremely positive. As you say, I think the point a lot of investors got to where you've experienced amazing growth, but you're capped in terms of production. That shackle is now removed and investors clearly can see where the growth is going to come from.
I think so. It was a very logical step, and everybody that we've spoken to, is just so happy with this because it was that logical step. It had to happen. We were hamstrung by raw material capacity. Yes, we had lines to third party, but the import process and then having it to GMP standards and Australian qualities is actually quite challenging. So be able to have it all internally now is really significant for LGP to deliver into those commercial sales volumes that we're targeting now.
And as we close this investor webinar, one last message for shareholders.
I actually want to thank everybody. So I'm just so grateful. We have the most incredibly loyal shareholders on the register for LGP, and understanding our business model and particularly our vision and our growth strategy. It's so significant. It gives us so much confidence and that you've chosen us to support. So thank you, and you will see some really great stuff coming out from Little Green Pharma.
Always delivered. Always been exciting, always leading the market. Exciting times ahead for Little Green Pharma. Fleeta, thanks for your time.
Thank you very much, David, and thanks to our shareholders.